Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 1st. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We got a lot of economic data coming out today, despite the fact that it is a Monday, but it isn't some of the more important economic data points. Like we get a lot of these PMI numbers, which is Purchasing Managers Index and Consumer Price Indexes and GDPs, but these aren't the most important ones, but it does help give a little bit of an indication as to what the major economic data points are going to look like. So let's, without further ado, get it on. Like I said, overseas, we look at the flash estimates, PMI. We get those same flash estimates here in the United States, but that's not our most important number. Our most important number is the Institute for Supply Management, or ISM. But across the pond, like I said, it's their flash. We did not get that today. We got some other economic data points, but we'll take a look at them anyway. Spanish manufacturing comes in at 47.9, expected to be 49.6. Remember, anything on these PMI numbers below 50 is contraction in the economy, signaling that there is a possible recession. You get three of them in a row on the major ones. That is when you see recessions right around the corner. So these are a little bit of an indication there. And then we got Italian manufacturing PMI coming in at 48.4, in line with expectations. German final manufacturing PMI 45, expected to be 45.4. Unemployment change was negative 1,000, expected to be 1,000. That's one of the only good economic data points that we've seen across the pond. And then final manufacturing PMI for the rest of the greater European region came in at 47.6, expected to be 47.8, so in line with expectations. But again, all of those below expectations there and below the 50 mark, which is the line in the sand for whether or not we are expanding or contracting. French final manufacturing came in at 51.9, expected to be 52, so that was one of the ones that only came out above 50 there. And German manufacturing PMI 45, they're the major manufacturing region. French and German are the major manufacturers of the European region. German probably the bigger one of both. Not good when it's coming in below expectations there. And then we got Great Britain's manufacturing PMI coming in at 48, expected to be 49.5, again, below 50. And then here back in the United States, one thing we got all day today is OPEC meeting, so that's going to be all over the news. You're going to have to keep an eye on that. That's not going to be a data point that's released. It's just going to be kind of heard. So you'll have to watch TV to get on that one, I think. So here in the United States, we got manufacturing PMI 50.6. The manufacturing PMI, though, that we really look at is for the Institute for Supply Management. That also came in at 51.7, higher than the expected 51.3. So we are still expanding here in the United States. No revisions to last month's number. Construction spending here in the United States, negative 0.8, expected to be a positive 0.1. They did revise last month's number up to 0.4% from unchanged. So a nice revision there, but not quite enough to make up for the headline number there. Still looks pretty dismal there. And then manufacturing prices paid for the ISM came in at 47.9, expected to be 52.9, showing there's no inflation. We've been talking about this. There's no inflation across the board. Why was the Fed raising interest rates? Well, it was really to make their own assets look better. So it wasn't really in the interest of the overall economy at that point. But now they have to really start thinking about that now. Excuse me. On to crude oil. Right now we're seeing crude oil move higher by about $1.19, testing that $60 barrel again today. Overnight we did test that and breached it. Day session we started coming off of that just a little bit, just below $60 a barrel. I'm hoping that that 60 holds and we start rolling over here a little bit, especially with the way that the economic outlook is looking here. Most of the markets across the board and across the pond are in negative territory, which is kind of signaling for a recession here. And a recession does not go well with high gas prices. So we would like to see those come off so that it creates that velocity of money I feel like I'm talking about again until I'm blue in the face. All right. Gold futures, off by about 17 points right now, well off of the lows of the day. I mean, they were down looking like we were going to test the 1380 or 1375 area, which is this Fibonacci line that we got lined up here. Nice big move back again after we're starting to see some of this weakness in the overall equities. That's going to be a bit of a flight to safety here with gold futures. Even though we are below that 1400 handle, that is just a psychological level. There's no real Fibonacci line that I can find that matches up with that. So it's more of a psychological level when we're trading above and below that, but it should act just like a support and resistance as people battle that out in and around that pricing area. All right, we've got the bonds in negative territory, but just slightly off their lows of the day as we're starting to see some of the equities start to accelerate to the downside. Now, we printed all-time historical highs this morning off the open. It was really a product of trying to print the overnight highs in the day session. I've talked about that quite a bit. They really don't put any credence in those overnight prints. So the day session likes to get that done during open market operations. But bonds starting to make a move back, as we can see with the VIX. It's in negative territory, still in the teens, but moving higher as the equities are starting to lose a little bit of steam. You can see that we've got the Dow Jones Industrial Average up almost 200 points, well off the highs though. Something to note here that we're seeing is, let me pull my screen out so we can get this going. Anyway, what we're seeing here is this little bit of a gap here across the board in the markets, right? Anytime you get those gaps, that usually has that feeling of we're blowing off steam. Now, I've talked about this with the rubber band when we get kind of wound up pretty tight, which is what we've been doing. I've talked about these inside days getting strung out, that once that energy is released, we get that pop in one direction or the other. Well, I've been holding off on adding trades to my account, right? Because I don't know the real direction where we're going to go, because it's pretty vague with the way that the charts are setting up right now. And now we got this gap to the upside. That's making me feel like we have created a bit of a top here in this equity move, especially with the economic data points that are coming out. They're not looking too good. I would expect the market to start rolling over, maybe put a little bit more pressure on those thumb screws that we have on with the Fed, trying to get them to lower interest rates a little bit more quickly. All right, but like I said, Dow Jones is up. We've got the NASDAQ up on the day as well by about 115 ticks. But you can see right now we are near the lows of the day. We traded up to the highs, and now we are moving down as the day progresses. Maybe looking to cover that gap, but I don't think that we are going to continue to move too much higher here. That NASDAQ trade was a day session trade. We can see this 2981.75 is a day session. We'll see that when we break down on the E-mini S&Ps. Actually, we can just pull this off right there, and you can see that it's still, we've taken the overnight session out, and we still have the same high here. But again, we are still seeing, even though that this trades overnight, we usually don't get to see these gaps, but overnight we did. We popped above the Fibonacci, this 23 Fibonacci line right there. That acted as resistance on Friday, and the market just stopped right there. Once we opened up, we got that pent up energy. It popped to the upside, really rallied to the highs right at the open of the day session. We printed those highs and have pretty much seen a straight sell-off in E-mini S&Ps since that point. You can see that happening right here. Overnight market gapped higher. Pretty messy overnight, but you would have to say that the market overnight was very long. Came into the day session. They printed a high right here in the overnight session. So once we opened up with our day session, we printed it by about a quarter tick higher than the overnight high. And as you can see, the market really flushed to the downside. Probably a product of trying to get some of those overnight longs flushed out, get out those weak hands. We talk about that a lot, but there's still a gap here that is going to be in the back of everybody's minds that needs to be covered. And I think that when you get these pops to the upside, this is what I was talking about with, you get this rubber band really winding up tight, building up some pent up energy, and then the market snaps, we get this move. I've been talking about that for about a week and a half, that's what it felt like we were doing. We finally got that pop to the upside. Now, I don't think that it's a confirmation of anything at this point. There's a lot of markets that we could pull up that really look like, you know, their tops. We could right here in general dynamics, looking like it's really kind of blown off some steam to the upside. I could just kind of flip through this. XRT looks like it's blown off to the upside. Charts, of course, taking your time to load. Lows looks a little toppy. XLE looks like it's blasted off to the upside. Toyota, you know, you got all these gaps blasting to the upside. I just think that it feels like it's just a little overdone. Baba, look at that chart. I mean, we have a gap out to the upside with that doji. To me, you know, tomorrow anything moving to the downside is going to look very bearish. We've got these engulfing major patterns, or major engulfing patterns going on with these markets, where they opened up on the highs and have just completely started sliding to the lows of their day. So the markets really kind of blew off some steam. I'm looking for them to start to roll over. I'm not going to add anything right now. I'm going to kind of hold off and wait and see on these. But the markets to me look like they could have found a bit of a top. We do have some good economic data coming out later on today, this week, I should say, especially on Wednesday. We're getting front loaded because Thursday obviously is the 4th of July. We are still open on Friday to get the monthly non-farm payrolls. So that's going to be an important day, even though it's going to be a short day for most of us. It's still going to be an important morning that we're going to have to trade and get a great idea of what's going on in the overall markets across the board. So really strong week for economic data that will probably help us discern what direction we're going to go, if we're in a recession or if we are really continuing to trudge along here in this economy. All right, check out this week's webinar. It's going to be on Wednesday though, because Thursday is that holiday. We're going to move it up just a little bit, so check it out. It's when we come up with a bias, we come up with a directional move. We think that we have this assumption. Now we have to find what strategy fits that assumption for that particular underlying. And I'll show you how to go through those steps to make it very easy. It's going to make it narrow your focus, allow you to have confidence in the strategy you're picking, that it is the one with the highest probability of success for everything that's going on around this underlying. I'll show you how to figure all that stuff out, real easy steps in that webinar, so check it out. And that's all I got, other than if you can't take that, take it easy.